What is accounting? According to Investopedia, accounting is the process of recording financial transactions pertaining to a business, which includes summarizing, analyzing, and reporting these transactions to oversight agencies, regulators, and tax collection entities. Accounting, also known as accountancy, is the systematic process of recording, classifying, summarizing, and interpreting financial transactions and events of an economic entity like a business or organization to provide useful information for decision-making. In simpler terms, accounting is like keeping track of all the money that comes in and goes out of a business and then organizing this information in a way that helps people understand the financial health and performance of that business. Here's a breakdown of the key aspects of accounting: recording financial transactions as they occur, classifying transactions into relevant categories, summarizing this data into financial reports, and interpreting the information to understand a company's financial position and performance. The most common financial statements include balance sheet, which shows a company's assets, liabilities, and equity at a specific point in time; income statement, which reports a company's revenues and expenses over a period to determine profit or loss; and statement of cash flows, which tracks cash movements into and out of a company over a period of time. The main goals of accounting are to provide useful information for decision-making, measure financial performance, assess financial position, track cash flows, ensure accountability, and comply with legal and regulatory requirements. Accounting is often referred to as the language of business because it provides a standardized way to communicate financial information. Different types of accounting cater to specific needs: financial accounting for external users like investors, management accounting for internal users like managers, cost accounting for tracking and analyzing costs, tax accounting for tax compliance and planning, auditing for ensuring accuracy of financial records, and forensic accounting for investigating financial irregularities.